Welcome to It's the Economy. This is a very important topic now. The tariffs that President Trump promised have been imposed in right earnest, starting with China. While the tariffs on Canada and Mexico have been stayed for a month, the 10% imposed on all Chinese imports stands. China has retaliated with a 10 to 15% tariff imposition on imports of coal, LNG, agri-equipment, pickup trucks and large cars from the US. The Chinese, yuan, which has begun trading only now after the lunar holidays, has actually depreciated. It's depreciated to 7.28, I mean the offshore Chinese yuan, and it was 7.25 before the holidays began. So clearly the impact has been negative. All Asian currencies are also slightly downbeat today, despite the dollar index falling. One would have expected currencies to go up today. That's not how they are. Let's try and understand where do we go from here. Currency is most important, but also global growth, inflation become important. I have with me two experts, Louis Kuijs, the Chief Economist Asia-Pacific at S&P Global Ratings, and Chi Lo, the Senior Market Strategist Asia-Pacific at BNP Paribas Asset Management Company. Gentlemen, thank you very much indeed for your time. Louis, if I may start with you. First, should we understand this as less than we feared? After all, the president has stayed back from going ahead with that 25% on Mexico and Canada. It looks more like bark than bite. And China, which we were told 10%, 60% is only 10%. So do you think we need to fear the tariff war less than we thought before Feb 1st?
Latha, I don't think so. I think the president of the United States has two reasons to talk about and threat with tariffs and to impose them. One is economic, and they actually have laid out already, the White House, a pretty comprehensive agenda. They will go all over all their economic relations with China, Europe, other countries. That will come in due time when we will get tariff imposition because of that. The other is, these non-economic factors like fentanyl, immigration, these kind of things. So what we've seen now, the threats to Canada and Mexico are related to these non-economic factors. Then they have been taken off temporarily. The ones on China are not, the ones that we've had so far are not the only ones. There are also going to be additional tariffs being imposed for those economic reasons. So I would caution against being, optimistic about what we have seen so far.
Okay, fine. I perhaps got misled by the fact that he withdrew the tariffs within 24 hours, or at least postponed them. Let me get to you, Chi Lo. How would you look at the impact on currencies? We saw the initial depreciation in currencies. I mean, the rupee took a pasting, but is the worst behind us in terms of reaction of currencies, or have we just begun?
I don't think. I think at this point it's too early to call for bottom or any change in trends of the currencies. Now, the tariffs by default, by itself, is dollar positive, because with tariff imposed by the US on other countries, one of the easy way for the other countries to fight tariffs is to have their currency depreciate. So I think that trend, other things being equal, still intact. We are still looking at a strong dollar, at least in the short term, against the other currencies. Now, going forward, it will all depends on how the tariff implementation, the negotiation will play out. Now, if we do see a very serious tariff impact, big tariffs imposed by the US on major economies like China, Europe, and other big ones, we will likely see the dollar continue to go up. But then if negotiation brings down the tariff impact, then we may not see that much depreciation and so on.
Okay. Louis, would you agree that we still have to see a lot of strength? I mean, we saw the dollar go to 110, and then after the tariffs got announced and withdrawn, over the last 48 hours, they have come back below 108, 107 point change at this point in time. But the worst is yet to come in terms of, positive for the dollar strength?
Well, I think what we saw in recent days was, that whenever whenever tariffs look likely to be imposed, that strengthens the dollar and weakens other currencies. And so when that reverses, we see some relief for other currencies. But yeah, I think we're not at all out of the woods in terms of that tariff action to come.
Okay. Well, now let me get to the growth and inflation picture. Louis, in the US itself, the fear is that it'll be more inflationary. There are some calculations available. I think Morgan Stanley put out something saying that it'll be 30 basis higher if that 25% had gone on Mexican and Canadian imports. What's your sense? What is the impact for China? What's the impact for the US? And what's the impact for us in Asia, where the expectation is China will dump and therefore it'll be disinflation for us? Your thoughts?
Yeah, so there are indeed a lot of things going on, right? So, I think firstly, it helps to understand that the bigger your economy is, the smaller is likely to be that impact on your growth and things like that. And so, the impact would have been the largest in Mexico. It's a bit smaller in Canada and even smaller in the US itself. With regard to China, the Chinese economy will be hit by those tariffs. We expect growth, to be hit by something like 0.5 percentage points this year, a bit more next year. Inflation, as you mentioned, will be under pressure in that weaker economy, but also, as you said, when Chinese exporters cannot so easily export to the US, well, they will be looking for other destinations for their goods, and that could be within China itself or the rest of Asia. So it will amplify downward pressures on prices outside of the US, including in China itself and in other markets. So there are quite a few things going on over here.
Yeah, we are counting on disinflation for us as one of the perhaps, advantages of this war, one of the few advantages. But Chi, what would you expect will be the impact on growth? Do you think exports of all countries will suffer? Or, I'm trying to gauge the impact for India itself. That's my intention. But you tell me whether you're going to see a fall in global trade and global growth.
Definitely, the tariffs' impact on global trade will be negative. We are likely to see less global trade, more inflation in the short term, but ultimately, medium term, beyond a year or so, tariffs impact is deflationary, which means that the impact on growth is also deflationary, especially for those economies and markets that export to the US, including China. Now, what's important going forward is, from the grand scheme of things, look at the monetary policy trajectory of the major central banks, especially the US, because if the short-term inflationary pressures derails the rate cut narrative that the world financial market is now still banking on, we could see even short-term risk or correction going into risk assets, stock market, and so on. But beyond the short term, if we do see the growth impact, including that on the US, come back to haunt the economy, depressing growth, when that's become obvious, we would see central banks, US, Europe, other countries will go back to the rate cut path, which in turn will help risk asset going forward. So from an investment perspective, short term, we are likely to see correction in risk assets, but then beyond the short term, we may we could see a rebound in the risk asset prices.
How would you define the non-short term? Beyond 1 year, 1 year is short term?
Between half a year and 1 year, that's typically we see the inflationary impact of tariffs on prices.
Okay. Louis, what would you expect would be the US Fed's reaction this year? No cuts or one cut? But more importantly, what's the impact on growth? Global growth takes a hit. Are we going to, for instance, when we are counting Indian growth, would you lower it from S&P?
Yeah, so we are in the camp that expects the impact of tariffs to be pretty negative, negative in the US itself, also, of course, negative for those countries that are facing those tariffs, but then there will be spillover, right? And when country A grows less, it will import less from others. So also we should not underestimate the impact of the uncertainty. You know, if you're a company right now and you're deciding on your investment plans, what are you going to do? You will end up delaying things, and that uncertainty may in the end actually be the largest drag on growth. So all in all, this is definitely a negative for growth. And coming back to that US Fed picture, yes, we also expect that, already in recent months, right, we had to adjust our narrative on the US Fed. When the news about the Trump plans came in, we had to adjust our plans, and we now see already less room for the US Fed to cut its rates, even in the absence of those tariffs. If those tariffs were to actually go ahead, the ones on Canada and Mexico, then we would not see room for any cut this year, and only late next year would then they be able to start cutting again. So that impact is quite significant.
Okay, just a very quick last question. Chi, what's the level you are looking for the Chinese yuan itself? 7.4, 7.5, or even worse?
We are looking at around 7.6 by year end if the tariffs are sustained. But an important factor that we have to monitor is the Chinese policy to stimulate growth in China. If they are successful, we could see a turnaround in investment sentiment, portfolio flows back to China. They could push the CNY US dollar back down to below 7. So we are looking at two scenarios, but base case is going to be more weakness in the short term.
Immediately weakness, yeah, which is why I think today the weakness is reflected on the rupee as well. Although the dollar has fallen, the rupee has also weakened. Thank you very much, gentlemen. This is just a teaser. We will have a longer conversation because I think we will have a lot of reasons for this conversation. Thank you very much for joining us. Have to wrap up on Bazaar. Chartbusters coming up.